Okay, let's make a start. Good afternoon, everyone, and welcome to this IUA market briefing on international sanctions. As we're experiencing most vividly now, geopolitical instability is extremely challenging. It can spark investor retraction, risk aversion. It can slash the value of global markets and cause significant disruption to trade, particularly those in our market where we're looking at physical goods, dealing in physical goods on a multinational basis, and often subject to lengthy, complex supply chains. Now, as we know, international sanctions can be an effective but relatively blunt geopolitical tool. It portrays governments as decisive, politically active, far less risky in terms of political capital, collateral damage, and overall expense when compared to military interventions. Application of unilateral sanctions, i.e., those without broad international consensus, has escalated significantly, as indeed as the potential overreach by governments to try and control the actions of entities trading in their countries, perhaps using their currency but not directly sanctioned by them, what we know as the secondary sanctions phenomenon. More recently, the rise of protectionism adds a further layer of complexity. To my reckoning, we're now on the 19th EU sanctions package in relation to Russia-Ukraine. We've seen many iterations of the oil price cap. The Iranian regime has been subject to sanctions for decades. Put short, sanctions sits front and central to our daily operations, and it's an apt time to revisit recent developments. With that in mind, delighted to introduce Maya Lester KC and Michael O'Kane. Maya is a senior barrister at Brick Court, and Michael is a senior partner at Peters and Peters. They are amongst, I would say, the most renowned sanctions-focused lawyers in our market, and are also authors of the excellent global sanctions tool, which we at IUA use daily, and I would certainly commend to you. Maya and Michael will focus on some of the themes I've just mentioned, and will in particular touch on diverging UK, EU, US sanctions policy, some of the recent cases, legal cases and developments, sanctions circumvention, the shadow fleet, and a few other subjects as well. We want this to be an interactive session if at all possible, and Maya and Michael are happy to take questions throughout or at the end of the session. So please post any questions into the Q&A function in the Zoom app. And we'll take those as we go through. And in any event, I'll revert at the end of the session to manage. You should also note that this session is being recorded, and we should be able to make a copy of that available post-presentation. So with that relatively brief intro, I'll pass directly over to Maya and Michael to start the presentation.
Thank you very, very much indeed for having us. It's a pleasure to be on this webinar. We are very aware that people who are listening and watching, some will know everything about sanctions and deal with them day in, day out, and perhaps others a little less so. So what we're going to try to do is dive straight in with some current issues relating to sanctions, but we really would be delighted if this becomes a bit of a discussion insofar as that's possible on this medium. So please do fire away with what you would like to talk about. Until we're interrupted, what we thought we would do is that Michael will speak first and I will follow after that. And he will touch on some of the topics that have just been outlined, but divergence between the US, UK, EU, a bit about oil price cap, shadow fleet, and a bit of crystal ball gazing. I will then get into a few legal issues without trying to be too lawyerish about it, but some issues about ownership and control, enforcement powers, a few interesting recent cases. Thank you for the plug for our site, globalsanctions.com. I know some of the people listening and watching are subscribers to the site. We're always delighted to have feedback, but just to say anyone who is listening can get a 20% whopping discount on a subscription through having registered for this webinar. So please do follow up on that. And we would be delighted to give you a demo or a free trial as to what the site can do. But it is a mark of the geopolitical, very fast moving and dramatic environment that we now update the site, I would say 10 to 15 times a day. There are sanctions and export control stories from around the world, sometimes even more. So it is a very, very fast moving area. And we try to keep up to date through updating our site. So with that introduction, I'll hand over to Michael.
Maya, thanks very much. So good afternoon, everybody. It's really nice to have this opportunity to talk to you all this afternoon. Just before I sort of get into the meat and potatoes, just to say a little bit about sort of the sanctions experience that we have. And we've been doing sanctions for about 15 years, since the Arab Spring in February 2011, dealing in the whole kind of spectrum of sanctions work, whether it's delistings in the UK or the EU, where we've had considerable success, hundreds of OFSI license applications, contractual disputes, compliance advice and policies, and even acting for people who've committed sanctions breaches. And it's a really fascinating and ever-changing dynamic practice area. The perfect example of that, obviously, is when we put this talk in our diaries. We couldn't have possibly predicted how global events would shift again in a very profound way, as they have done over the last few days, which will no doubt have knock-on effects, not just on the insurance industry, but also on the global economy for some time to come. Ukraine is obviously now off the front pages, but it will feature quite heavily in sort of what we want to talk about this afternoon. But obviously we'll sort of reference the knock-on effects or potential knock-on effects of what's happening in the Middle East at the moment. I just wanted to, echoing what Maya said about the amount of experience that is amongst the people who are listening, I just wanted to just spend a minute or two just on sanctions generally. Where have the current crop of sanctions kind of come from? Because it's quite important as a way of trying to make some determinations about what might happen in the future. Obviously sanctions have been around for many years, since commerce began, but the current drive in respect of sanctions really started about 25 years ago. The principal drivers were this. Number one was the attacks on 9/11. What 9/11 did was it forced the United States Treasury to take a different approach to sanctions. Previously, sanctions had primarily been sectoral or country specific. So, for example, sanctions on Iraq during Saddam Hussein after the 1991 Iraq War, or sanctions on South Africa because of apartheid. What changed as a result of 9/11 was a key focus driven by the US Treasury on what are called targeted sanctions on individuals and entities. In this instance, it was targeted sanctions on those who were connected, supporting part of the Taliban or Al-Qaeda. And they created these Taliban Al-Qaeda lists. And those lists, very importantly, were implemented through the United Nations as the main driver. And the United Nations has become a lot less relevant for the purposes of sanctions, which is a very important development to be aware of. Second driver is the Iraq-Afghanistan wars. As a consequence of that, there has now been a clear political reluctance to deploy ground troops and find alternatives in terms of foreign policy, and sanctions have, to a large extent, filled that foreign policy vacuum. The other thing to be aware of is they are very useful as political tools. They are seen as low risk. They allow politicians to be able to espouse that they're actually kind of doing something in response to a situation. When in reality, quite often, all they're really doing is signaling the sort of disapproval of a particular government, whether it's the UK or US or EU member states, about the actions of a particular country and those supporting that country. Another important factor is that until 2014, primarily sanctions were imposed on the smaller countries, so North Korea, Myanmar, Cuba, Zimbabwe, Syria, Libya, etc. What changed, obviously, in 2014 was the annexation of Crimea by Russia. Now, the response of the West to that was still very nuanced, because there was quite a lot of balancing against the need to maintain commercial relationships, and particularly in the energy sector, with Russia. And in fact, there's plenty of evidence, for example, with the UK government, that the UK government was advocating for UK businesses to continue to maintain business relationships with Russia even after the Crimea annexation. Obviously, I'm sure for everybody listening to this, 2022, February the 24th, was the most seismic event that we have had in the world of sanctions. There's no doubt about that. Sanctions were imposed, fairly quickly. As Chris was saying, the EU is on its 19th package. So back then, there was coordination between the EU, the UK, the US, Canada, Australia, New Zealand, Japan, essentially kind of G7 countries. And there was a huge amount of optimism at that time that sanctions would be effective. And the principal reasons for that optimism were, number one, it was perceived that the Russian economy was essentially, Russia was just a large gas station, and its economy was pretty much almost entirely dependent on energy exports. Number two, it was perceived that there would be widespread global support for sanctions being imposed on Russia. And also there remained some optimism that sanctions work. And the optimism that sanctions work derived really from the achievement of the JCPOA against Iran by the Obama administration, which was signed in 2016. A lot of Western policymakers believed that that had come about in part or in almost all as a consequence of sanctions. Now, that's a controversial view, not shared by many experts on Iran, but it definitely was a prevailing view amongst Western policymakers. So I see no clear end to their use, because also they're easy to apply, but they're very difficult to remove. So sanctions don't often get removed. I mean, look at Cuba, for example. Sanctions were imposed on Cuba in 1962 by the United States because it had the temerity to bring a global power then, the USSR, into the Western Hemisphere. Those sanctions still exist for the purpose of seeking regime change in Cuba. So it's also worth making the point that even when sanctions are removed, and let's take Syria as an example, where sanctions have broadly been removed by the EU, the UK, and the US in 2025 as a consequence of the fall of Assad, it still means that there is an enormous chilling effect on that country and a risk aversion by businesses to want to sort of go back and invest and start engaging in commercial transactions. So that's kind of where sanctions have kind of come from and the impact. I want to turn just briefly now just to look at something that's probably of specific interest to you in the insurance sector, insofar as Russia is concerned, and looking at assets, etc., on the ground, and that's the sort of shadow fleet oil price cap issue. So where have we come from and where are we now? So the main drivers of the oil price in terms of countries were the United States and the United Kingdom. There was lots of interaction during the course of 2022 between the relevant institutions in those countries around how do we put more pressure on Russia. And interestingly, although many people think, well, this would be done between the respective foreign offices, at Foreign Commonwealth Development Office in the United Kingdom, or ADOFC, the Treasury here with the United States. In fact, a very, very prominent role was played by the National Security Advisory Team in Downing Street in relation to the oil price cap. And this is actually, if you're interested in this subject, it's set out in a very good book published last year called Choke Points by Edward Fishman. Now, it was introduced in December 2022. The oil price cap was then set at $60 a barrel. It's come down twice since then by the UK, the EU, Australia, New Zealand, etc. It's now sitting at $44 a ton. Interestingly, the United States has not reduced the price cap, which creates its own difficulties. The two key aims of the oil price cap when it was brought in were, one, to allow Russia to continue to export oil to avoid a reduction in global oil supply and a subsequent price hike. And number two, to sort of limit Russia's revenues from oil exports. Thus, the perception was it would curtail its ability to prosecute the war in Ukraine. So in short, these regulations are complex, but in short, what it meant was that no Western company or individual could be involved in any way in any activity connected with the trading of oil above the price cap. And obviously, that would include the insurance market, reinsurance market, insuring vessels and those engaged in that activity. Looking back now, the benefit of experience, one of the key planks in the thinking was just, I think, plain wrong. If you look at the interviews of the key officials, particularly the US officials at the time, they believed that actually nobody would buy oil above the price cap because the role of Western interests in the operation of oil exports from Russia was so extensive. If you take, for example, the role of Lloyd's of London in terms of the insurance of the shipping sector. This was quite an optimistic view and reflective of a sort of general optimism around the impact of sanctions on Russia. There was a insufficient attention given to the fact that Russia could pivot and react away, and it would find ways of circumventing the restrictions that were being imposed through the oil price cap. Pivoting and reacting away means essentially doing more trading with other countries, and that's what we've seen. The trading with China and the trading with India has increased, but also Russia's ability to circumvent has been a big part of how it has been able to maintain exports roughly about 6% above the pre-invasion levels. And it's done this in a number of ways, which I'm sure the insurance sector needs to be very well aware of. Number one is the purchasing of old vessels, second-hand vessels, and the creation of this vast, what's called shadow fleet, which is estimated at somewhere between 900 to 1,400 vessels. Number two, it has used sort of national insurance companies rather than international companies or Western companies. It's also used on occasions rogue insurers based outside of Russia. Vessels have been engaged in what's described as flag swapping. So sort of traditional flag carrier states like Panama, the Marshall Islands, Liberia, those came under great pressure from Western states in order to restrict or stop the allowing flag carrying for these shadow fleet vessels. So what has happened instead is that fake registries have been created in places like Malawi or Benin or even those sort of Comoros Islands. So it's currently estimated by experts that there's more than 500 ships in the shadow fleet sailing without a valid flag. Another activity that has been engaged in is name changing of vessels, huge increase in name changing, where vessels get sanctioned by the West and then they simply change the name, but obviously they cannot change their IMO numbers. Another issue is around hidden ownership. After the invasion, what we saw was a web of companies being set up, principally in the Middle East, in India, in China. Those companies, the ownership of those companies, very opaque, and those companies were then being used in order to purchase the second-hand oil tankers and then engage in trading in oil above the price cap. And a final thing that has been done is the turning off of the automatic identification system that ships have to have. And this has allowed ship-to-ship transfers to take place, made it much more difficult to monitor what's going on, and also create a real risk of collisions at sea and posing an environmental threat. The creation of the shadow fleet, which has arisen directly out of the introduction of the sort of the oil price cap, the response of the West to that was a little bit sort of too little too late, because, for example, it wasn't until October 2023 that the US sanctioned the first two oil tankers. The EU didn't react until June 2024, sanctioning 27 tankers after lengthy negotiations between EU member states. But the big sanctions on the shadow fleet across the EU and the UK really came to bite in 2025, with actually the UK being particularly muscular. We have seen, for example, the lack of a flag allowing vessels to actually be intercepted at sea. So the French intercepted a ship in late January of this year called the Grinch off the coast of France. And then there was obviously there was the well-known case of the United States following a ship called the Bella One, which was falsely flying a Guyana flag. The US Navy chased it across the Caribbean into the Atlantic. It altered course. It changed its name during the course of this journey from the Bella One to the Mariana, and then it changed its registration to Russia. It even painted a Russian flag on its hull, but it was intercepted on the 7th of January by the US with help from the United Kingdom, and it's now berthed in Scotland. So obviously all of this creates huge burdens for the insurance sector, including brokers and including reinsurers, having to engage in very sort of deep due diligence on, what is being insured and what activity is being engaged in. And there are some examples of where the insurance industry has not been particularly compliant. I can give you one. In October of 2025, there was a huge investigative piece published in Reuters about the operations of a company called Maritime Mutual, based in Auckland in New Zealand. That piece alleged that Maritime Mutual had insured 1 in 6 of all of the vessels in the Shadow Fleet. It was raided by the New Zealand police on the 16th of October of last year. Maritime Mutual said that it had a specific sanctions warranty in its contracts in 2025, but no warranty similar existed in the contracts, importantly, 2022, 2023, 2024. According to the Reuters piece, obviously there was real risk posed not also to the reinsurers who were reinsuring Maritime Mutual's risk. And they included some of the world's leading reinsurance companies like Munich Re, Hanover Re, etc. And also brokers were exposed. Interestingly, piece in Reuters comes out in October 2025 with all of this detail. Maritime Mutual was then sanctioned by the United Kingdom as part of a vast package of sanctions to recognize the 4th anniversary of the invasion of Ukraine on the 24th of February of this year. And also, interestingly, its owner, who was a UK national, Mr. Paul Rankin, was not sanctioned. A really up-to-date example, also in respect of the Shadow Fleet, is the example of Mr. Paul Ormerod. Now, Paul Ormerod is a chartered accountant, formerly with Ernst & Young, set up his own business in 1990. He was sanctioned by the United Kingdom in May of last year, May of 2025, after a Financial Times piece revealed that, financed by a subsidiary of Lukoil, he had purchased 25 second-hand vessels for the Shadow Fleet between December 2022 and August 2023, using a Marshall Islands company that he had set up. And the reason that his situation is of particular interest to people like me is that Mr. Ormerod was delisted, in fact, by the Foreign Office on Monday afternoon of this week. He put out a statement, essentially, in short, saying, very sorry, shouldn't have done it, will never do it again, and I hope it serves as a lesson to others not to do what I did. A real sign of what's called kind of changed behavior. So what has been the impact of all of this activity in relation to Russia, and is there going to be any kind of change? Well, according to the latest data, revenue from Russian oil exports in 2025 is down 18%, but the crude export volumes are up 6% on the pre-invasion levels. Now, as I said at the very beginning, what's going on in the Middle East may have many ramifications. One of those ramifications is obviously that the oil price is going up. And so what we may find is that where India and China have been quite dependent on oil that is exported from the Gulf through the Straits of Hormuz, the Straits of Hormuz currently, there's great difficulty in those exports, and that market is currently dormant. What we may find is that China and India pivot back more towards Russia with a view to importing more oil, which is going to, of course, increase Russia's revenues arising out of.
Michael, should I just chip in with it? We've got these two questions.
Sure.
One's come through, and I just interrupt now because it links into your discussion about Shadow Fleet. So, how is Russia crewing the Shadow Fleet? Are they using Russian nationals, or using anyone who doesn't know they're on the shadow vessel?
So it's a good question, and in terms of the restrictions that are in place, obviously the restrictions are very widespread, so that essentially no Westerner can be involved in any way, shape, or form in relation to what is going on as far as the Russian fleet is concerned. So when it comes to the nationals who will be involved, it's not going to be people from any sort of Western states. So they'll either be sort of Russian nationals, or they will be nationals from countries that are not concerned about the impact of Western sanctions on them.
And just a follow-up question, just one for myself actually. So Shadow Fleet gets into a collision or some sort of environmental damage, pollution risk. How would the kind of logistics flow through in terms of salvage services, cleanup. Would that be done through a licensing arrangement with various sanctions, regulatory authorities? Is that how that works? Or I'm just thinking about here that there's not insurance in our markets available, but we might have an incident in middle of the channel, for example.
Yeah, no, I think that's a very good question because um, the sanctions that are imposed, essentially, there are the restrictions that they impose. It's recognized that those are going to create situations that are going to become unmanageable, and as a consequence, you have various grounds that are allowed for the purposes of being able to issue licenses, and they're all set out in Schedule 5 of the 2019 Russia regulations. In a situation like this, there will be natural nervousness that engaging in assisting a ship that is a sort of sanctioned ship is going to be considered to be a sanctions breach in some way, shape, or form. I would anticipate in those circumstances that what's called an extraordinary situation license, which is a ground in Schedule 5, could be applied for by anybody who wants to participate in some sort of salvage or other type of operation in relation to that situation. And I would also anticipate that OFSI would grant that license very quickly. I suspect there may be some skepticism amongst the audience of OFSI's ability to pivot and to be able to grant licenses quickly. OFSI last week put out a policy document around its prioritization criteria for the issuing of licenses, and kind of humanitarian emergency situations is a key priority for them. They have become, in my experience, much more responsive on the granting of licenses than they have been previously. I think their triaging system is better. I think they've got more people. I think obviously the benefit of experience over the last 4 years has also really assisted. We are seeing licenses, a lot more licenses coming through. In fact, I've had 3 licenses from OFSI just this morning in relation to client matters that I'm dealing with. So that's how it would be dealt with.
Thank you.
I want to just talk a little bit. I mean, I think there's concern about, well, are other Western partners who are engaged in the imposition of sanctions, are they all aligned? Do they all sing from the same hymn sheet? Are there any divergences? How do we manage risk going forward? And I think that's a really important issue. So, for example, on Russia, all I would say is historically there has been pretty much alignment between the US, the UK, EU, Canada, Australia, Japan, Switzerland, etc. That has changed somewhat since the election of Donald Trump, because the US, in respect of sanctions on Russia, has been largely inactive. We did see towards the tail end of last year, there were sanctions imposed by the United States on Lukoil and Rosneft. We also saw tariffs being threatened against India for the importation of Russian oil. But that is rather that's kind of low grade by comparison to what the Biden administration was doing. And obviously, that is because the United States current administration is focusing on peace talks to try to bring the conflict to an end, and therefore determines that from a policy perspective, it doesn't want to be imposing sanctions. The EU and the UK take a different approach. They're not engaged in the peace talks, and they want to put as much pressure on Russia as possible. And we've seen this actually very interestingly through the targeting of the Shadow Fleet in particular. So there's a real focus on the Shadow Fleet. Resources are being put into this. The United Kingdom is opening a new command center in Gateshead to monitor and potentially to intercept sanctioned vessels that are part of the Shadow Fleet. So I think that divergence may well continue for some time. And I think that the other thing to be very cognitive of as insurance companies, reinsurers, brokers, providers in this market is the United Kingdom has done something very interesting, which it hasn't done before. And that is it has started sanctioning overseas companies engaging in entirely lawful business. Okay, so they're not engaging in business that would otherwise be unlawful. They're trading directly or indirectly with Russia. So many companies in the UAE, in China, in India have been sanctioned by the United Kingdom. The focus of the UK foreign policy in this regard has not just been on oil, has been on oil to an extent, but also on the supply of certain goods and technologies that can be used or have been used on the battlefield between Russia and Ukraine. So the provision of insurance services to such companies needs to be sort of kept under review. The one of the key interesting points about this is the designation criteria in Regulation 6 of the Russia regulations sets out what someone has to do in order to become a target for sanctions. Those regulations, the criteria are enormously broad and enormously deep, and they include, for example, carrying on business in a sector of strategic significance to the government of Russia. 9 sectors are listed, everything apart from health and food. But the way it's been interpreted now by the Foreign Office from some of these sanctions decisions that have been made is that any company that has ever traded with Russia from outside Russia, whether you're, British Petroleum, or you're a law firm, or you're an insurer, or whoever it might be, going all the way back to 2014 is vulnerable. They consider that carrying on business in a sector of strategic significance. So it's bringing millions of people and hundreds of thousands of businesses into the remit where they could potentially be sanctioned. So that's sort of a divergence, I would say, between the UK, EU, and Russia and the United States in respect of Russia. With Iran, which is obviously a key focus now, the situation is sort of the opposite. So previously there was no alignment. If we go back to the fact that Trump pulled out of the JCPOA in 2017, much to the dissatisfaction of the UK, the EU, Russia, China, etc., who'd all supported the JCPOA. But now sanctions since the 1st of September snapped back on Iran, and now the UK, they were all broadly on the same page. Iran is actually a very good example of what I mentioned about the decline of the relevance of the United Nations. The JCPOA was supported by all members of the UN Security Council when it was signed in January 2016, broad backing from Russia, broad backing from China. But now the sanctions on Iran are mostly country-led, and the UN has been completely cut out. So the US, of course, is the most aggressive. Scott Bessent, for example, the Treasury Secretary, said recently sanctions on Iran caused the recent uprising, designed for regime change, and obviously the current hostilities are in the same direction.
Just Michael, can I?
Oh, yes.
Sorry, I was just going to pick up on a couple of points because it feels just an apt time, and it links more into kind of regulatory reporting and policy. So the first question looks at ship-to-ship transfers, so AIS evidence. As we know, it can be quite murky in terms of AIS manipulation, GPS spoofing. But where we, as insurers, have some evidence of activity between the insured vessel and the suspected shadow fleet, how do we go about the regulatory notice? Do we have to? Is there kind of a trigger that, okay, we think it's definitely happening, or is it's a judgment call? How do we make that call? Because, as I say, often it is sometimes a lack of information. An AIS has been switched off. How do we sort of pivot our way through that conundrum?
So, I mean, that example that you're giving is really reflective of a question that we get asked an awful lot across all different contexts and different circumstances. And what it is about, really, if you drill down, is this: that you can be liable for a sanctions breach, either criminally or civilly, if it can be shown that objectively there were reasonable grounds to suspect that there was a sanctions circumvention or sanctions breach taking place. So the real question is, what constitutes reasonable grounds to suspect? It's an extremely low evidential threshold. It's the equivalent of what is required in order to arrest somebody. So there has to be some evidential basis in order to support the suspicion. And so what you're then doing is you're into a kind of a risk analysis about red flags and the overall context and the circumstances. But the ultimate question that you need to ask yourself as you review the situation, and these situations are obviously very organic and they change at any one point, is would a reasonable observer who is educated about these issues, looking at this situation objectively, form a view that they suspected there might be a sanctions breach? They're reasonable grounds to suspect a sanctions breach. And if the answer to that question is yes, or the answer to that question is maybe, then you really do need to either report or take steps to try to sort of dig deeper in terms of your due diligence on exactly what is going on. The deeper, in our experience, the deeper you dig, the more questions that you ask, the more likely you are to get to the point that you need to get to. In either there'll be more red flags, there'll be more obstruction, there'll be more inability to or unwillingness to cooperate, etc., and that will take you to your reasonable grounds to suspect, or you'll get information which makes you feel more comfortable. We've seen this, and obviously Maya will come on and talk about this a little later. We've seen this a lot, for example, around the whole issue of ownership and control, and ownership is more straightforward. Control very nuanced in relation to entities, and that's given rise to lots of issues which have actually been the subject of some quite lengthy and difficult litigation in the United Kingdom and elsewhere. I know time is running on, so I just want to say one other thing, just in terms of divergence, and that is for those who are engaged in insurance in the global market, the real focus, despite what's going on in the Middle East right now, the real focus of the United States administration under Trump, in terms of foreign policy, where sanctions will go and where export controls will go and criminal enforcement will go, is China. It's China, definitely. And the reason I say that, there's lots of reasons for that. Trump is surrounded by China hawks. But if you look at what happened when Trump came in, and I'm, essentially a sort of criminal lawyer, very interested in the criminal landscape, the Klepto Capture Task Force, designed to put pressure on Russians in the United States and circumvention and sanctions breaches, that task force was disbanded by Trump. And what Trump did instead was he took the US Department of Justice and the people who were involved in that, and they've pivoted and switched their enforcement priorities. And if you look at the new revised US Department of Justice prosecutorial priorities, it is China, China, China. They want to use the US Department of Justice significant resources on white-collar crime strategy, export controls, sanctions breaches, to focus the administration's national security priorities relating to China. So we can talk a little bit about what the future may hold, but I think when one's considering their business interest, that's got to be a major factor. There's a lot more I could say, but I'm going to stop now because we're 40 minutes in and Maya hasn't had a chance to say a word yet. So I'll hand over to her.
Okay, I will rattle through some recent issues quite quickly. And then I don't know if Michael may want to answer another couple of questions coming in on the shadow fleet if there's time. But I do a lot of litigation work, unsurprising for a barrister, litigation and arbitration, also all sorts of advisory work, including in relation to breach investigations and giving legal opinions on sanctions issues. Ownership and control, as you all know, is a very vexed issue, including currently, because financial sanctions apply not just to those on lists, but those not on lists who are owned or controlled by the people who are listed. Number of problems that will be familiar to all of you. First of all, there are different tests for ownership and control in the major sanctions jurisdictions, the US, the EU, and the UK. Essentially, the US doesn't have really a control test as we know it. It relies on ownership alone. The test for ownership is different in that, as you know, the US and EU threshold is 50% or more. The UK threshold is more than 50%. The US and the EU in their guidance consider the criterion met for ownership if aggregated ownership of two or more designated parties exceeds the threshold. But the UK really only looks at aggregated ownership if there's evidence of a joint arrangement between designated parties. So this is quite a vexed issue. In the EU itself, different national competent authorities across the EU who are responsible for determining whether an entity is controlled by designated people can sometimes and have sometimes reached different views on the same company. Eurochem, other high-profile examples of this. There's just been an opinion of an advocate general in the European Court in Luxembourg, not binding, but still interesting, saying that the existence of national lists, of which there are some in 3 or 4 member states, themselves listing who they have determined to be controlled by designated people, are lawful. So we'll see what happens to that, but it's still an almighty mess in terms of these tests for control, and basic legal certainty, knowing who is subject to the rules, is still very difficult. The UK test is very hard to interpret, as those of you responsible for that will know. It's very subjective, how you determine whether a designated person controls a company or doesn't. The government's position is interesting because it doesn't, as you know, put out sort of negative clearance decisions. It doesn't generally say this company is or isn't controlled, but sometimes it does. So it's been a bit inconsistent on this. And in a context in which there is strict liability, this has led to what you could call de-risking, or just, understandably cautious decisions being made by financial institutions and others. There is a current consultation on this issue. I think the government would be extremely keen to have as many detailed responses to that consultation as possible. It's not asking about ownership, although it has indicated in the consultation that it is actively exploring options to respond to calls for greater alignment, including whether to adopt an aggregation model, amending the 50% ownership rule to 50% or more to bring it in line with EU and US sanctions frameworks. So the deadline to respond, particularly in relation to control and the difficulties that you face, is the 13th of April. One interesting question is what levels of due diligence are required given strict liability in relation to control and ownership. The key here, I think, is keeping a good paper trail to show that you have conducted reasonable due diligence. What does that mean? I mean, the case law says, including quite recently a case on a Russian bank, that the EU, that OFSI can only establish that there is actually a breach of sanctions if there is actual control established. So the offence is only made out where it's established that an individual or entity is in fact owned or controlled by a designated person. The consultation says that the government doesn't prescribe the level or type of due diligence that should be undertaken to ensure compliance, but I suppose you would say unhelpfully recommends that robust due diligence may include conducting research, requesting further information from relevant entities, and seeking legal advice where obligations are unclear. There was a recent-ish enforcement action against the former Moscow office of Herbert Smith, the law firm, in which the government said the need fully to consider ownership and control beyond just whether an entity is directly subject to sanctions is key. And it said failure to properly consider and identify clear ownership is viewed more poorly by OFSI than an incorrect but good faith assessment of control. Firms should take sufficient time and care to properly assess the applicability of sanctions with regards to specific legal entities. Where does all this get us to? I think the key thing is to keep a careful paper trail to show that questions have been asked, legal advice has been taken where relevant. In some cases, it might be appropriate even to engage one of the many consultancy investigative firms who do sort of deep digging into the reality of control on the ground. Obviously, all of that is very much case by case, dependent on how much money is at stake and so on. But watch this space, obviously, in relation to that consultation and responses. On the enforcement front, the US is still, way more active than the UK or EU member states when it comes to enforcement in the sense of penalties for breach. But over the last few years, as you know, there has been a massive uptick in UK enforcement from a standing start of 0 to, you know, say 10 years ago, there was very, very little. And so, for example, I think between 2019 and 2024, combined fines, apart from Standard Chartered, were only just over 300,000 and no criminal prosecutions. HMRC was, you know, much higher than that, but that's the OFSI figures. Now, lots of signs of stepping up. The launch of OTSI in October 2024 on trade sanctions, strict liability fining. There was a policy paper in May last year following a cross-government review of sanctions implementation and enforcement, which sort of highlighted the need, according to the government, to include the deterrent effect of enforcement. A consultation in summer 2025 on improving civil enforcement processes. So, and recent decisional practice, 6 enforcement actions last year, including public disclosures of breaches in cases where a fine isn't issued, a HMRC recording a record penalty of over £1.1 million as part of a settlement for breach. The first successful criminal prosecution, which Michael would be happy to talk about, having represented the individual who was prosecuted, a bit of an odd case, but still. Now, increased powers is important to know about. So OFSI announced in January this year that it would be doubling the maximum penalty for financial sanctions breaches to the greater than £2 million or total value of the breach. In February, OFSI updated its enforcement and monetary penalties guidance, including several changes to the enforcement framework following another consultation. Key changes there, a new early account scheme to help expedite investigations, updated case assessment framework for penalty calculations, including a new focus on the strategic priority of the relevant regime, and a new settlement scheme with a 20% discount, and fixed penalties for information and licensing offences, which the government is also pretty keen on. I would say overall, the government is still very reliant on self-reports of breaches, which are hugely extensive because the UK, as far as I know, has far more extensive reporting obligations than other jurisdictions. So there are huge numbers of reported breaches, not as a result of governmental investigations, but as a result of people having, particularly law firms and others, having obligations where legal privilege doesn't apply to proactively report breaches to the authorities. Final word on recent judgments and cases. I mean, there are huge numbers now of sanctions judgments. There are also arbitral awards, which are generally not made public, so hard to learn lessons from those. Many of you will know that the AerCap litigation is ongoing, and as you know, the High Court found in favour of the lessors in the joint insurance claims relating to the aircraft grounded in Russia, and held that EU and US sanctions didn't prevent the insurers from indemnifying the claimants for their losses, couldn't rely on sanctions clause, which said that the insurers wouldn't be liable where providing cover was unlawful because it breaches an embargo or sanction. That is now very much continuing, so I won't say more about that. There are a number of cases about difficult questions about the territorial extent and overlap of different sanctions regimes. So because we have this very complex picture of overlapping, sometimes consistent, sometimes not, sanctions regimes from different jurisdictions, there are unsurprisingly a lot of legal claims and issues about which of those are relevant when parties clash in litigation. It's very hard to generalize about those, but it very much depends on the facts. So what is the law of the contract that was agreed? What is the place of performance of contractual obligations? Is there a sanctions clause? or some sort of force majeure clause? If so, what does it say? And how will the courts interpret it? Are the sort of obvious questions. So one recent example of a judgment in this area, case I was involved in called Beneath Co. Slightly odd case, but essentially what happened is that because the necessary place of performance for the payment in question in that case was the US, because it was a dollar obligation, US dollar obligation, and therefore the evidence showed that a US correspondent bank had to be involved. Therefore, this was one of the perhaps rare cases where an illegality in foreign law, i.e. US law, unraveled an English law contract according to the principle in a case called Raleigh Brothers, and an interesting analysis by the court also of that strange piece of legislation, the blocking regulation, which really puts into acute form the disparate obligations, because it says that in some cases it's actually a criminal offence in the UK or the EU to comply with certain US laws, and that came to a head in that case as well. And then finally, interesting cases about clauses that will be relevant to many of you here, which talk about exposure to sanctions. You will probably be familiar with the Maman-Cochet case from 2018 about an insurance policy where that phrase exposure to sanctions was interpreted there. The court there rejecting the interpretation that the clause would bite wherever insurers were exposed to risk. Risk wasn't enough to escape liability. The court held there on that clause that sanctions would only prohibit payment where there was an actual exposure to sanctions rather than a risk of exposure. More recent case called Tonsit Maritime against Two Rivers, commercial court judgment analysing sanctions clauses there in a charter party dispute involving Russian oil shipments. In that clause, it was sufficient if, in the owner's reasonable judgment, there was a risk of exposure to sanctions. And the court held that what had to be determined was whether at the time of the incident there was an objective risk that the owners might be exposed to sanctions. And the court said the owner must act in good faith, make necessary inquiry, and base its decision on all the material available at the time. On the facts, the owners had not made a reasonable objective assessment that there was a risk of sanctions exposure, and the claim failed. Charterer's counterclaim succeeded. And I think the message there is, keeping records on all the checks that had been made, which might lead them to assess the decision in that case on ownership and control. But equally, charterers have to ensure that their orders don't expose owners to sanctions risks. Finally, there's been a Supreme Court hearing, but not yet judgment, in the Celestial Aviation case. Again, that's the sort of financial obligations counterpart, if you like, to the insurance claims in AerCap. But this is about the impact of Russia sanctions on financial obligations under letters of credit for aircraft leases, and the extent to which sanctions affect letters of credit obligations. Number of letters of credit issued in relation to leases of aircraft by Celestial and other entities to the Russian airlines. And when sanctions were imposed in 2022, following termination of those leases, Unicredit said it couldn't process payments because of sanctions, which in effect meant that sanctions had sort of retrospective effect. And the Court of Appeal held that Regulation 28.3 of the Russia regs prohibits payments under letters of credit where they are in connection with prohibited arrangements, regardless of whether the leases had been terminated. It emphasised the very broad language of that regulation in trade sanctions, which aims to cast a wide net over objectionable arrangements. They overturned the High Court's interpretation, which limited the scope to prospective arrangements, and said that the licensing regime exists to address the unintended consequences emphasis on parties proactively obtaining licenses to mitigate risk, and an interpretation of Section 44 of SAMLA, that important provision on whether you've acted reasonably in believing that payment would breach sanctions or not. So we will see what happens when the Supreme Court gives judgment there. We've been asked in the questions whether there are slides for this talk, for which the answer is no, but whether we can provide a list of legal cases and authorities that I've rattled through, and I can certainly give a list of all of the judgments. If you do have a look at globalsanctions.com and look under UK judgments, you will find all of these, including summaries of all of the cases there. So I don't know whether there's time, to answer a couple more of the questions, Chris, that have been put in the chat just before we end. I think there's a couple of minutes. I think they're probably more in relation to Michael's presentation than mine, but I'll certainly happily follow up with case names.
Absolutely. So let's just very quickly just take, I think there's two more questions, but the first one, and probably is more for Michael because it links back into the marine element. So the question is, what is the likelihood of a fake vessel owner pursuing a claim against an insurer through the courts when a claim is declined in the event that a shadow vessel is involved in an event? Now, much will be dependent on the policy wording there and the individual circumstances. But is there a kind of general comment you can make, Michael?
If that's the prospect of a person sticking their head above the parapet to say, hello, I'm the owner of a shadow fleet vessel, I would have thought it's quite unlikely, because they'd be putting themselves into the crosshairs of the Foreign Office to be sanctioned themselves. As I was saying, in 2025, huge emphasis by the Foreign Office in terms of individual sanctions and entity sanctions on going after those who have been engaging, including some really quite high profile individuals. So I would have thought that's a pretty unlikely prospect. And even if they were to do that and be prepared to take that risk, I mean, the complications of engaging in litigation of that type in the United Kingdom in terms of what that involves from purposes of sort of licenses and how the court deal with that, I think is also, a big chilling factor. Can I deal with the other question, which is about, given so many, the sanctions designation criteria are so broad, how are insurers supposed to cope with that? I think that's a good question. The reality is, look at the way the policy is being adopted by the Foreign Office. So who are they actually sanctioning? In reality, the only UK company that they've sanctioned for trading with Russia between 2014 and 2022 was a company called Evraz, and that was sanctioned in particularly peculiar circumstances around ownership and control of Roman Abramovich. Put that to one side, no UK company trading with Russia has been sanctioned by the government. So I think it's extremely unlikely that they would change that policy decision. Insofar as then the companies that meet the criteria who are overseas companies, look at those who are engaged in the Russian oil sector, who are engaged in trading above the price cap, those that are owned in jurisdictions where there are red flags like the UAE, India and China, those that are engaged potentially in some way, shape or form in the export of dual-use goods to Russia, some of which can be used on the battlefield. So that's not just the manufacturers, but also the distributors, some of whom can be in EU member states or in states that are geographically proximate to the Russian Federation. I think those would be where the kind of primary areas of risk from my perspective are concerned.
Okay, thank you, Mark. I think we've hit time. There was one more question about the kind of future UK government policy around secondary sanctions. We've seen them tiptoeing, I guess, into a more US style approach, although not close to being there at the moment. But I think we probably need to leave that in the interest of time. And I'm pretty sure that there'll be significant articles on secondary sanctions in your global sanctions, the blog and the daily feeds that we see. So yes, we've hit time. As I said at the start, we will put together a recording of this session. Unfortunately, they're not slides, but I think the recording will be good value to refer to in the future. And with that in mind, a really warm sort of thank you to Maya and to Michael. I kind of feel like we could do this session every about 2 weeks, and it would be not only useful but also probably different each time as well. So a huge amount going on. It's a huge issue for the insurance market and wider financial services. So it's great that we can have updates such as these, and I think we'll have a bit of a discussion. But it'd be great to get you guys back in a few months or towards the end of the year, particularly as current sort of geopolitics evolves. But with that, also I'd like to thank everyone for joining. I think we had around 250 people on the call, so it just shows the importance of this subject matter and obviously the quality of the speakers. And so thank you very much, my UA. We'll leave it there and enjoy the rest of your day.